So there seems to be some big news in prop firm land that FunderPro is now offering MT5 as well as changing up their one-phase accounts. So FunderPro is affiliated with the Trade Locker Group. If you guys follow Owen Morton on Instagram or X, I believe it's one of his and his family's companies. And obviously, like, they own Trade Lockers, so they've been primarily pushing Trade Locker as of late. But it seems like they're now also enabling the use of MT5. And granted, that wasn't even the big deal because you can always use a trade copier. However, what's really interesting now is that they've changed their one-phase accounts. And this was actually brought to my attention by a client of ours like a few days ago. And I was a bit almost perplexed because they had always had like almost a 14% profit target on their one phases, which was simply too high. But now they only have a 10% profit target on their one phases, which is in line with industry standard for these types of accounts, which is really interesting. And then if we also take that into account that they now have MT5 and they have some discounts, it's quite an exciting development, and I will be likely starting a challenge with them. And what's interesting, though, is they've always claimed to be the only A-book prop firm, and that they're able to give people real funds. And one of the reasons why they actually have more stringent rules is because they're an A-book prop firm. So if you hit 14% and whatnot, and like you can take daily payouts because you're trading with real money, and therefore they need to be a bit stricter. So that was actually really interesting to me. But now that they're coming more in line with some more like industry standard practices, I'm curious as to if they're still an A-book prop firm or if they're doing a hybrid model. Because what we can see here is that with some of their one phases, for instance, you don't get your rewards daily. Whereas if you go with a two-phase, I believe on some of them here, you actually you can get daily payouts. At least you could like 2 weeks ago. So unless they've moved that significantly. But that's actually pretty interesting there. So I guess we'll have to see, like, did they change their business model? Did they realize that, like, hey, a B-book is just way more profitable, so let's go with that? Are they doing a hybrid approach? It's actually really interesting. But for us, like, for all intents and purposes, we primarily just care about getting paid. So if they're actually now switching it up to make it easier for us to use our strategies and use one-phase accounts, that's probably a big, interesting development for us. So now let's go and actually look at the pricing here. One thing to note before we go into that is two things I always look for in prop firm challenges, or three things: frequency of payouts, whether or not it's static or trailing, and what's the leverage like. And if we go here to the one phase, which are my favorites, let's take a 10K, we can see that the drawdowns, appears to be static. So the capital of your account cannot at any time given time drop below the specified percentage of the initial account value. To me, that sounds like a static drawdown. So number one, box checked. In terms of leverage here, I believe it's a 1 to 10, but it might be on a different page. Here we go. There we go. Metals, oil, indices leverage, 1 to 10. Perfect. So that's actually really fantastic because that shows that we're able to use the majority of our strategies here, and we're able to even actually risk 2% per trade. So we can pass pretty quickly. They do have a consistency rule, and this is the one downside with FunderPro. They do have a consistency rule. So it's the earnings of your best trading day should not exceed 40% of your total profits. This is not that horrible in all fairness, because like realistically, like you just need to have 3 good days, and then you, like, generally speaking, can clear this rule. So it is doable. Like you see some groups like I think Aquafunded has some which are like a 15% consistency rule, which is totally ridiculous. 40% is not half bad. We can work with this. It's not that bad. News trading is fine. Leverage is reasonable. Challenge duration unlimited. Let's see how many trading days they have. They don't have a consistency rule once you pass. So this is all actually pretty good. Like if they keep these rules and they find a way to make it work, I would actually go to that. So one phase, let's do a 10,000. Let's try MT5. Always get paid out as quick as possible. So first reward in 7 days. And now swing account. Here they speak to the leverage and they say like, hey, in order for you to get this, you need to have 1 to 10 with swing add-on. So I'm curious as to if you don't put the swing add-on, what is your profit like? So this would definitely need to be clarified. Because if you don't add that, like, do you perhaps have something which is lower? Is it higher? Usually swing means lower leverage, but perhaps it's different here. So we would have to find out. But let's just to be safe, add that on as well. And if we say that we're paying around $136 here, given these conditions, that's not cheap, but it is not horrible either. Let's contrast this to, let's say, Blueberry Funded, for instance. And if we go here, let's try a one-step 10,000. So $75 with the same conditions with a 20%, with a 7-day payout, you'd have to do a 20% add-on here. So let's say that's another about like 20 bucks or so. So then that would put us to 95. So we're at 95 versus here for the, pardon me, 10,136. So this one is considerably more expensive. You're looking around 40%, if not higher, premium relative to Blueberry Funded. So good option, still pretty expensive. So anyway, to wrap this up, this is a pretty interesting option. One thing to note is we need to figure out what our leverage is without the swing account. We just kind of really go into the fine print, read there to see what's happening. And it's still pretty expensive, which is interesting given their competition. But it's a good option. So particularly if we can get a sale, if we can find a way to make this work, it could be something to add to our portfolio. And I always love to see one phases with static drawdowns and MT5 and good leverage being added. And this is now a new, really viable option. So pretty excited about this. So guys, hope you enjoyed the video. I'll see you in the next one.